Hi guys, welcome again to our webinar, and this is CLIQ company. My name is Olga, and we like to see you all guys, and thank you very much for your comments during our last webinar. It was very great, and we really appreciate it. So as we live, I highly recommend to you to write your comments and ask questions if something is not clear or would like to specify some information. So today we continue with our useful information which help you to actually succeed in your trading. Whatever market you are trading, if it's B or Forex or currency or commodity, no matter, stay with us. You will find out a lot of useful information because we actually give only practical approaches and practical methods. So today we're going to talk about very important people which actually left very remarkable mark in the history of trading. So there are a lot of examples of people traders who actually went down in history because of the absolutely amazing things they were doing in the process of their trading. And as a rule, these people actually famous because they have managed to make a lot of money during trading, and they are ready to share, which is most important, to share their results and their achievements with us, with many other people who actually make the first steps in their trading, in the process of their trading. And their trading strategies, one of the such traders, technicians and financialists, we are going to present to you today. And I'm talking about Larry Williams. So Larry Williams is a trader, the most successful trader, we can say, that is very famous for his techniques and methods that he developed a long time ago, because he has been trading for more than 50 years already, and they still work now. And actually he is famous for taking part in a championship which lasted 1 year, and he managed to increase his deposit from $10,000 to 1 million and even more. It's a different calculation, like 1,700,000. And actually, which is more remarkable things about him, he repeated it twice or even 3 times. And his daughter also, she's a trader, she actually achieved the same results, so she repeated these records. And his techniques are absolutely easy to follow. And though Larry Williams is trading or prefers trading indexes and futures, his methods, his techniques, his patterns, because he developed very important and working with great efficiency some technical patterns, are still working with any markets, including Forex. So we are going to talk about the most remarkable person in the history of trading, Larry Williams. And we are going to present to you 4 of his trading patterns. And we will start from the terminal points, so-called terminal points. Okay, it's a strategy which actually consists of 2 bars. By the way, as he was trading, started trading like 50 years ago, he was using the chart of bars. But to show you examples more clearly, we actually use candlesticks. But in my process of explaining how these techniques work, I will use his bars or candlesticks. Okay, so not to get confused. So he was trading bars and paid a lot of attention to so-called highs and lows. So we are interested starting to examine this pattern or strategy, because we are going to present to you his pattern in the way of strategy, which makes it unique and actually ready to trade for you and make it easier for you with all the settings. And terminal points is the characteristic of lows and highs, and we are going to use it on the trend. Larry Williams pays lots of attention to the risk management, and he prefers to trade with the trend, especially according to this pattern. So we are going to use it on the trend and within the trend. Okay, so this pattern consists of two bars, and we actually are looking for a bar with lowest lows with highest highs, and two bars next to it. One is on the right, one is on the left, with the highs lower and the lows higher. So I will explain. So we are looking on the lowest low and two bars or two candlesticks with high lows. We are looking for the higher high and two bars or candlesticks with the lower highs. We are looking for some peaks. You see it very clearly on this slide, which means that after the next bar opens, so we are waiting for 3 bars, and after the next bar opens, we enter the market. Here we see a very good example of a buy trade. Here we see a good example of sell trade. So we wait until the right bar closes, and with the next one we open position. What are the main conditions? First, it's supposed to be like a peak, so we are going to wait until the peak is formed. Next, we need to see that actually if we are talking about the reversal of the price, it's better to be the candles of different selling or buying positions. But it doesn't matter in this trading strategy, so we take it as it is. So when you see so-called peaks, you open the position on the 3rd bar. Next, what about the tendency? I mentioned it, it's better to trade with the trend. What about stop loss? Stop loss is set lower than the lowest low, higher than the highest high. So this is how it works. What about exiting the market? So there are 3 variants, and actually you can use it in all the patterns that I'm going to present to you today. You have 3 variants. First, Larry Williams recommends to stay in the market and let your profit grow. So he has very exact timing. You're going to stay in the market for 3 days. Then you exit, you close your position and exit. And the second variant, you can stay in the market for only 1 bar is formed and closed. For example, if you are trading daily, and this is the favorite time frame for Larry Williams, and actually we are going to show you all the examples on his favorite time frame, but you can use any time frame starting from H1 and higher. So if you're using daily, it's supposed to mean that you stay in the market for 1 day, then you close your position, whatever the result is. And variant number 3, as you consider yourself as an investor, you can stay in the market until the opposite signal in the opposite direction appears. So as long as actually market lets you. But in this case, you have to use so-called tactics of break-even. We're explaining it in our previous webinars. It means that you have to hedge your profits, and as the market goes on, you have to move your stop loss after the first trading close, if you trade daily. If you are trading H4, after 4 hours, you have to move your stop loss to the profitable zone. So this is all the set of rules and conditions for trading this pattern. What about indicators? Okay, so Larry Williams suggests to use the trend. In this case, he actually recommends to use moving average. This is the simplest indicator which shows us a trend. So he gives the set of moving averages, and you will see them. You see them right now on the slide. But he suggests that every trader is supposed to make his own testing and elaboration and execution, and actually choose the best variant for himself or herself, fitting your target, your aims, your time frame, and your time staying in the markets, of course. But nevertheless, you can use his suggestions. So they are moving average 525, moving average 2530, these are periods. And as he was actually trading a lot of moving average 545, as he was trading a lot of indices, he also gives MA5 for S&P index. And as his favorite time frame is daily, he uses MA18. So if you're using only one moving average, how you understand the tendency? If the price is below this moving average, it's a downward trend tendency, so you're going to look for the entry points for sell. And if the price is above the moving average, you're looking for the entry points for buy. How to use two moving averages? It's also a very easy rule. So you need to wait until the break, until the moving average with smaller period, it's on the left, will break above the moving average with greater period. For example, for buy here. And if it breaks below the smaller period, breaks below the greater, the higher period, you open position for sell. Let's look how it actually works in the market. So this is terminal points, and you're following the trend, and you're looking for the lowest low in two bars or candles with a little bit higher lows. You open your position on the third candle or the third bar. You enter here. You can stay in the market during 1 day. You close your position over there. You can stay 3 days, so it's 3 candles. You can close position over there. You can stay in the market until the signal in the opposite direction appears. Look how long can you stay in the market, because actually we see a lot of signals here for continuation of the trend. So you can take a lot of money using this pattern, but I will suggest that you use tactic of break-even. Also here, this is the peak, we open buy here. This is the peak. This pattern works greatly, actually, guys. I love it very much. It works out with great efficiency, even that has a lot of years actually. We open position here, and also peak, we open position here, peak, we open position here, and so on. What about sell? Look, we have also unsuccessful tradings. For example, we have peak here, so the lowest low, the higher low on the right, on the left. We're supposed to enter market here with the next candlestick or bar, but see, the market has changed actually. And here we will take our stop loss. But nobody can avoid anybody from having lots of stop losses, or not lots of, it's a bad word, actually some of the unsuccessful trading. Actually, Larry Williams, in his book, he says that he was losing a lot. But what actually makes him great, because he was losing a lot, but he was actually earning a lot, much more. So this is signal for sell. So we are seeing also the peak with higher high, with lower highs of the left and right candles. We enter market here. We can close position over there, not a lot, but we can stay in the market for a longer period of time, at least 3 days. So here we could make a lot of money actually. And if we stay, we can wait until the next signal appears. So we will close our position on that. Maybe we will have 0 here. Also peak, sell. Here we have also a signal for buy. This is how it works. Okay, let's move on. The next pattern is called inside day. So what we are looking? We actually are looking for the bar. This pattern consists of 2 bars, and we are looking for the bar with higher high and with higher low. And actually, we understand, we are looking for, give me a second, inside day. Yes, okay. So we are looking for the pattern consisting of 2 bars. And we are looking for the bar, it will be our inside day bar, with lower high and with higher low. So this segment of the opening and closing price must be less than the segment of opening and closing price than in the previous bar. So actually the body of the candle is less the body of the first candle. It will be more clear. On the contrary, for the sell, we are looking for the bar, the same condition, with the lower high and with the higher low, and it's very important that the segment of the closing price and the buying price, opening price, should be less than the corresponding segment of the first bar. So the body of the candle should be less than the body of the candle of the previous one. So we have signal and our inside bar much less. We have signal and our inside bar a little less. But very important, I will specify with lower high and with higher lows. With lower high, higher lows. Okay, on the next formed candle or bar, you enter the market for buy formation, for sell formation. But the condition is following. Yes, you have already followed two rules. Lower high, higher low. The segment is less. Okay, but what is more important? How this pattern works with great efficiency. You're supposed to see, to look, to check, to make sure that the previous candle was selling, for example, and our inside bar, inside day candle is buying. So they're supposed to be different. Only on that condition, you open position for buy. For sell, the same way. So our signal bar is supposed to be buying. And only when we have this inside day bar selling, we open position for sell. Doesn't matter which candle actually is forming here, but logically it's supposed to give us a little bit of selling. Yeah, this is absolutely marvelous pattern, and let's check how it works in the markets. Here, you're looking for the bar with lower high, higher low, and the segment of the price should be less than the segment of the price of the previous bar. On the next bar, you open buy. Because it was selling, it's buying. All the conditions are taken into account. We follow it. You see how much profit we could earn here. Next. On the contrary, on the sell. Looking for the bar with the lower high, with the higher low, and the segment of the price should be less than the segment of the price of the previous candle. So on the next bar, we open condition for sell. This is how it works. Brilliant, as always. Next pattern, it's inside day, outside day. So we are looking, it's also a pattern which consists of two bars, and we are looking for actually a bar with high highs, lower lows, but it's not the necessary condition that it was in the previous example. What we do really need to take into account is the segment of the closing and opening price is supposed to be bigger than in the previous candle bar. And with the formation of the third bar on the right, we open condition for buy. On the sell, we're also looking for the candle or bar with higher highs, lower lows, but the most importantly is the segment of the closing price and opening price supposed to be bigger. So it must include, when it's outside, it includes the previous day. It must be bigger than the closing and opening segment of the prices of the previous bar. And on the third candle or bar, you open your position for sell. Okay, let's look at the elaboration of this signal. We are looking for the candle or for the bar with high highs, lower lows, and the segment of prices is much bigger than in the previous bar. So with the next candle or bar, we open sell. We stay in the market the same way. One candle, one bar, 3 days, or as long as the market gives us signal for the opposite direction. It's over there. Okay, let's look at more examples. This is inside day, if you see the difference, because the body of the candle is much less than the previous one. So it's inside, also profitable. Okay. And this is outside. You see, it's brilliant because it's actually easy to distinguish them on the chart, and which make it well known for all these years. And also, we are looking for the high highs, lower lows, and the body must be much bigger than the previous one. And position for buy was this one. So how these three patterns are working. And I would like to mention one more thing. Actually, yes. So it's very importantly, if you entered the market, for example, it's terminal points. On the third candle, you give you buy, but what happened? I'm sorry. You open position over there. You see this buy with the third candle. But the market gives you minus. You're supposed not to be worried a lot, because you certainly set your stop loss and you agreed on your stop loss, because actually you have made it. And there is a rule that Larry Williams gives you. You exit the market as long as the first profit appears with the candle or with the bar. So you're staying in the market gives you minus, minus, minus. But with the first candle or bar, profitable bar, you have to exit the market and close the position. This is the rule, you need to follow it. The last one, the last pattern I'm going to explain to you, it's a smash day. A smash day is the following the trend, but also it can appear on the reversals. But actually, you see this is continuous rising or falling of the price, so is the characteristic of the trend. So this pattern consists of two bars or two candles, and it's very easy. The opening price and the closing price must be lower or higher than the previous one. So I will show you more exactly. On the low, or a little bit less than low, you open your position. On the high of this smash day, of the second bar, you open your position. I will show you on the chart, maybe it will be more clear. So you have two bars or two candles, and you open your position with on the high of the second candles with the higher high and higher low. Here. And you open your position on the second candle with the high high and high low. Here. You see this one, this is number 2. This is number 1, this is number 2. Regarding stop losses, we set our stop losses a little bit lower than the low, a little bit higher than the high of the bigger bar. Here is over there. Lower than the low. Lower than the low. Here. Here, if we opened position here, it's supposed to be higher, a little bit higher than the high. If we open sell position, a little bit higher than the high of the bigger bar. You understand? We need to take the bigger bar. If it's inside day, the first bar. If it's terminal points, you see the lower low. Here, our stop loss. Here, our stop loss. Okay, on the peaks, here a little bit lower, our stop loss. Our stop loss is supposed to be a little bit higher than this high, higher than this high. So these are absolutely marvelous techniques that still working with actually with the help of Larry Williams, his development long time ago, and still are working. And just a few more suggestions. So you can use any time frame. Larry Williams recommends from H1 and higher, and daily one is his favorite. Next, some patterns work very good with the first, for example, first one, terminal points with the trending. Second, we are looking for reversals. So it can be used on the reversal of the price, as well as on the correction movements or drawbacks. So you can use it within the trend. And most importantly, you have to follow all the rules. Exit and enter the market at the exact time that Larry Williams recommends. So this is all. Thank you all for staying with us, and please contact us. And if you would like to visit us, please feel free to visit us. Don't be shy. Ask your questions. If something is not clear, we'll be very glad to answer you. And we continue to give our webinars and continue to get new and practical information for the process of your trading. Have a nice day or any part of the day, and have, of course, big profits. Bye-bye.